wishing you a good day ahead. Well, let's focus on Birla Corp. Well, that posted a weak set of numbers. The stock is down close to around 5%. Input costs spiked up, and clearly they have been struggling because the newly commissioned Mukutban cement plant that continues to drag the overall performance. We're joined by Mr. Aditya Sirogi, the CFO of the company, who joins in. Hi, Mr. Sirogi. Good morning. Thanks so much for joining in. Well, let's start off with Mukutban, the unit itself. That's dragging the EBITDA per ton and the operational performance as well. When do you expect this unit to turn around? I think for this year, you're guiding around 1 million tons of sales. For FY24, what kind of a ramp up can we see in this unit?
In this year, as we have said, we are expecting about 1 million ton. Next year, we should be doing more than 2 million ton. And as we have already said, from next year, we'll start getting the incentive of more than 600 rupees a ton, which will go a long way in improving the profitability of the unit. Also, the various waste heat recovery will be commissioned at the end of December, so that will bring down the cost further.
Okay. So that seems to be the big problem, right? Costs, because you've had a sharp surge in power and fuel costs. Your other expenses have gone up significantly. Can you tell us what is the expectation for the second half of the year? Will you continue to see this low single-digit margins? I mean, it's not even 5% in the quarter gone by. So what can we expect in the second half?
See, in the second half, margin should be much better than what we have done in the first half. Because in terms of both the fuel rate as well as the realizations, we are behind the peak and the bottom respectively, which we had witnessed in the second quarter. So going ahead, we see some moderation in the fuel rates and improvement in the realization. On the both the accounts, we should be doing better in the remaining part of the year.
Okay, all right. Mr. Sirogi, give us a sense about cement price increases. Now, we have heard that in select parts of the country, there have been price increases. So, if you could tell
Right.
us, what is the price, the average price in quarter 3, and if you could compare it with the average price of quarter 2. Then I'll come back with my next question.
Yeah, so the price increases have been in the range of 5 rupees to 10 rupees. In center and north, I believe it is 5 rupees, and east and west, it has been 10 rupees.
All right. So that is the price increase on an average for this quarter versus last quarter, right? 10 rupees, 5 to 10
Yeah,
rupees a bag.
yeah,
The
yeah.
other part the street will focus on is then on cost side. How much of cooling off on a cost per ton will we see, say in quarter 3? And I think bulk of the cooling off will happen in quarter 4. We're going as per current prices. So according to your analysis, what is it?
See, we have seen a peak of petcoke prices of about $250. From there, it had come down to as low as 165. It has again inched up and stabilized around $190 currently. And we see broadly in the range of let's say 175 to $190 should be the range for fuel prices.
Okay.
So if at these levels, I would expect the cost benefit on account of fuel to be in the range of 50 to 100 rupees a ton.
50 to 100 rupees per ton for quarter 3. So they'll cool off by 50.
Not immediately in quarter four only because of opening stock and all. If you
No,
we if you,
Mr. Sarogi,
yeah.
apologies to come in at this point, but I'm just wanting to understand what will be the cost per ton cooling off in quarter 3 and how much of it will it be in quarter 4? If you could give us a number, 100 rupees per ton, 200 rupees per ton, all costs put together.
In quarter three, I would say it should be around 50 rupees and quarter four around 100 rupees.
Okay. Tell us a little bit about how the demand is on ground. I mean, are you seeing a big pickup as far as demand is concerned? If yes, from which pockets? And I think you had a 15% volume guidance for the full year for FY23. Would you stick to that?
In terms of demand, October has not been that great because of festivities all across. But we do expect the demand to improve in the coming weeks and months. And yes, we are sticking by our guidance of 15% growth for this year.
Okay.
Okay, all right. So what about the EBITDA per ton range, sir? Keeping in mind that Mukutban is going to be dragging for the next couple of quarters, uh, what is the guidance that you could give us on the EBITDA per ton? If you want to include the unit or X of that unit as well, give us a broad number going by the price increases and cost cooling off.
See, as I said, our EBITDA per ton should definitely be better than what we have done in the first half. For the second half, in the previous year, we had done around 650 rupees a ton. With Mukutban, we should be doing around those numbers.
Okay.
At this juncture, that is the expectation we have. But a lot will depend on the market conditions as well.
So there is a lot of capex that you have put on board in Mukutban in terms of spends as well, right? The understanding is that perhaps over 300 crores was spent there. What does this mean for your debt situation? I think you have around over 4,100 crores of debt. Do you plan to
Correct.
bring it down in any way? And if yes, what could the debt be, say, 1 year hence?
I would say that we have seen the peak of our debt. 4173 should be our peak debt. From here on, it should reduce only. I can't give you a definite number. Maybe in the next quarter, I can give you a sense of what it should be in the next year.
Okay, all right. But debt has peaked out. That's good news. And also, just to confirm, sir, the EBITDA per ton, including Mukutban, will be around 650 rupees, right? That's what you're expecting for the second half.
Yeah, that's what we're expecting.
Taking into account Mukutban.
Yeah.
Okay, final question then. There's so much of talk about inorganic growth. Are you all looking at any asset? You'll have that ambition for 20 to 30 million tons, and you've been mentioning that will be organically. But have you looked at a couple of units? Say the India Cements Rajasthan unit, which reportedly is on the block. We have no confirmation about that. Have you looked at it?
No, we have not. As we just discussed, our debt is on the higher side, so we would rather like to bring it down rather than taking further leverage.
All right, we will leave it at that. Thanks a lot for joining in and all the best. That's Birla Corp saying that in the second half of the year, the margins will be definitely better than the first half. First half was very weak in terms of margins for them. And the Mukutban plant is definitely weighing on the EBITDA performance. But they're saying that things will improve. And this is the peak debt that we're seeing for the business, which is, of course, a positive thing. By the way, big moves coming in the market in terms of individual stocks. Coal India is now up over 4% and big volumes on Coal India. So do keep an eye out on that. And on the downside, Divi's Labs is the one that's taking a knock. So 3% lower on Divi's Labs and MRF down almost about 6% multi-quarter lows for the margins.
Absolutely. Sonia, so many, these lesser discussed stocks coming up, jumping up, even as the index is not doing much. So you look at Rushil Decor, which is up 10%. Axis Cades is up 4%. KRBL is coming up with about a 4% pop. I mentioned Ujjivan Small Finance Bank, which is up another 6% or so. There is Union Bank, which is about 6.5% higher. The Nifty PSU Bank Index, by the way, is up almost 1%. Phoenix Limited is starting about 4% higher. There is Honda Power, 16% pop. Again, lesser discussed, but 21-22 on that one. Care Ratings is up about 8.5%. So there is a lot going on in the small cap slash mid cap space, part of the market, which is doing very, very well. 20 points for now on the Nifty. So far it's playing out like what we saw on Monday and Friday, which is a very strong start. The market cooling off, doing nothing for the rest of the day. The last act has to play out, which is, of course, a pop in the last hour of trade, which has happened last two sessions. We'll take a break here. We have the management of Godrej Consumer Products, Samir Shah, joining us to discuss Q2 earnings and a bit of outlook going forward. We'll also have the management of Bosch joining us on the other side, Soumitra Bhattacharya of Bosch, to talk about their earnings. Stay tuned.